CME Group launched Micro E-mini Futures Contracts. Discover how a smaller Micro E-mini Futures Contract opens the world to greater trading possibilities.
Welcome to Market Movers. I'm Jim Uriel with Scott Martin.
Hi, Jim.
Okay, Scott, we have a G20 meeting. It's not just any G20 meeting. We've had these for 30 years.
You promise?
And this one seems to matter a lot more because the entire trade balance, which I think is the main focus, is hanging in the balance. Do you think we'll get a resolution?
No, but I believe any kind of news out of this meeting, which is generally good, right, that shows progress between the two countries, the U.S. and China, is something that the market is expecting and ready to take on in the sense that if a deal's not done by the end of this meeting of the weekend, it's not going to be that big of a deal to the market.
Tell me this. Let's say there's a nasty negative outcome. We get nothing. We walk away from the table and the markets are suffering on Monday or Tuesday. Does the Fed come to the rescue, dry our tears, and give us more dovish talk regarding the July meeting?
No, you'll be drying my tears.
Okay,
but
good.
Here's the thing, though. The Fed will be there. It's just not next week. I mean, you got a holiday week. You got some other things going on. You got other economic data, too, that the Fed's probably watching. They could be there to dry our tears after you dry mine later in July. And that's okay because, again, the market knows that the Fed is watching that kind of thing, and therefore the Fed's going to be obviously there if they need to be.
Now, before we dive into our trade discussion, I'd like to point out these are examples, not recommendations or advice. When we priced these out, the S&P was trading about 29.32, Scott.
Yeah, 29.32, kind of an interesting level, Jim, given some of the resistance we've seen around that 29.40, 29.50 level. And also, Jim, I believe some other things that I'm seeing in the charts that are interesting from a maybe protection standpoint here, just going into all those things that we have with G20 and a full month of economic data coming up in July, my friends. So specifically, Jim, today, an example of buying the week 2 July 2900 28.75 put spread in the ES. This will cost you about 7 ticks to put on, not too bad. So $350 to put on to make a potential 900. It expires July 12th. So we get through a couple weeks of economic data, including non-farm payrolls. You mentioned the August futures underlying at 29.32. Just a way to protect maybe some longs that you have out there that I believe the market could maybe take a little on the chin if we do get some negative news in the next couple weeks.
Not only is there nothing for me to disagree with, I have trades on that are very similar. I might even have those strikes on. I'm not positive, but I have something very similar to that. And I'm still relatively bullish. I just think that protection was fairly attractive price-wise. So
As it is, yes.
I'm looking at it a little bit different. I'm using the micro S&P, and we've talked about this before, a stop-in technique, because I believe it's not going to make a decisive move until it gets some talk of trade resolution.
Or momentum going,
so,
sure.
Right. So we're trading at 29.32 right now, but I set my stop at 29.40 in the micro. So it's a stop in when it gets to that level above, and that's counterintuitive to some people. So stop in at 29.40 with a 29.95 target. So nice and wide trade with a 29.05 stop loss. The
Yes.
risk's 175 to make a potential 275. You like?
I like. Now, the levels are very interesting, right? Because of the fact that we mentioned some of that upward resistance where if you do get that push above 29.40, 29.50, you could see some nice follow through. And similarly, on the downside, to your point, that stop out, that's a great area, in my opinion, to kind of look to see some inflection, as we've seen in the charts recently, where that 2,900 level seems to be a nice line in the sand.
Are you saying, so if it gets 29.05, which is my stop loss, once it gets that 2,900 level again, it gets in its sights, it's probably going to take it?
Yeah, watch it closely. And that's why, too, I picked out the strikes that I put on, too, because this could be one of those put spreads that I expressed that could be manageable from that standpoint because it could start to fill out down there.
Makes good sense. Thanks for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.